Should I be buying Bitcoin, Willy?
Yeah, you should. Of course you should. Oh, looking at this, yeah, 32.9. Yeah, that was the bottom. Anyway, like structurally, it's very, very strong, and demand started to come back in. I mean, I have a lot of people that ask me, what's my plan for the top of the bull market? If the past repeats, right, every time we've seen long-term holders holding most of the coins, it's structurally set up for it to run upwards. Bear markets happen when everyone who's holding the coins are noobs. And when you say like long-term versus noobs, it's basically how long have those coins been aged in a wallet. So if you look across all the wallets on the blockchain and you go, look, how old are these coins before they move? How long have they been sitting in these wallets? You know, it goes through cycles, and these tight cycles where most of the coins have been sitting there for more than 5 months. It's a very strong setup, which is what we've got now. It's at peak levels of these coins. The coins across all of the network have been sitting there, most of them, for more than 5 months. And people who do that, they've held on for 5 months. They're not selling. They will sell when there's profit be had, and you'll see that whenever it breaks out of like all-time highs and does a really strong rally, those guys that have been holding for 5 months start to take the money, and they take cash that's available. They cash out, they take the profit, and eventually new guys that are coming in to buy the rally, they're the new guys, and they want to get rich. They're the bag holders, but what typically happens is it's very vulnerable to a bear market because some of them sell, right? They sell. Like the 2018 bear was at peak new guys holding the coins. And the cycle repeats. Those new guys either sell, or the ones that don't become hardened hodlers, and they sell on the next rally when it goes even higher. So it's just like old hands are out, new hands become old hands, and it's back and forth. And we're in an old hand situation. We went rallying from 30,000 to 69, and we did see a little bit of sell down from those 5-month old holders, and they took some profit. And then as it sort of crashed down, let's say slide, it wasn't a crash, it was slid down, they, lo and behold, around about 40,000, low 40s, they just stopped selling. They've stopped selling for actually a number of weeks now, and actually they're now, like, you could say they're accumulating, or in other words, some of the new guys have sort of aged to the 5-month zone and they're becoming old hands. So those guys, as an equilibrium, that cohort is now gaining, and so it's actually strengthening again. So it's not a, structurally on chain, it's not a bear market setup, even though I would say we're at peak fear, like no doubt about it. People are really scared, which typically is a time to it's an opportunity to buy, and you don't often get this kind of pullback without it relief bouncing even. It's not, you don't sort of slide and then capitulate with, we've come down from 69 to 33, and it'd be hard pressed to capitulate from 33 down to say 20, because that's like retracing something like a 2018 bear market over two and a half months instead of a year, right? Anyway, structurally it's very, very strong, and demand started to come back in. The hodlers that were slightly being dispirited by the futures traders selling down have stopped selling. They're rebounding now, and there's accumulation coming. The whales are now, and when I say whales, these are guys with more than 1,000 Bitcoins. So I term a lot of those guys as potentially institutional investors. They're starting to flick over to buying, right? They peaked their selling in December. So you could say institutions were selling down in December, which is kind of a part of their normal cycle. They sell down, they redeploy in January. Looks like that started. The whales are coming in.
Should I be buying Bitcoin, Willy?
Yeah, you should. Of course you should.
So what was the bottom? 33K?
Yeah, that's something like that. It depends on what. Oh, looking at this, yeah, 32.9. Yeah, that was the bottom. That demand started to come in. It started to come in a few days ago. Most of this week, demand started to come in, and for weeks on end, it was just toxic. It was just no demand. It was like divestment. It seems pretty cheap right now. I've said that this is the last cycle, which is the end of the 4-year cyclical thing that we're used to based on the halvening. And now we're in for shortened cycles, just to be contrarian. We had a cycle starting May, and that was run down, and we had another cycle that started in sort of, what was it? It was like November. as we sold down through December into January. 6-month cycles. But that's it. Like that's the last cycle is kind of random walks of demand and supply upwards to the final price discovery. Yeah, no more 4-year cycles. And also it means, we're experiencing up to 60% drawdowns, but at least that's over 2 to 3 months instead of a year. Or my first bear market was the 2014 bear market, and that was the longest in Bitcoin's history. That was like nuclear winter. It was so long for that to be over. 2 to 3 months. It's pretty good. I mean, I have a lot of people that ask me, what's my plan for the top of the bull market? Because they're used to nuclear winters, right? 4-year cycles. And like my plan is always in operation, which is to take money to cash consistently. So I have because I don't believe in bull bear 4-year cycles and nuclear winters. I think we're just doing more of the same. This is the second time we've gone up and we've retraced more than 50%, and then we're going up, and they're just choppy. It's just choppy times. And so you don't want to be overexposed. You don't want to be all in. You don't want to be all in and then on leverage, because when it pulls back 50%, you're going to be freaking out. And there's a thing about freaking out is the most tragic thing about freaking out is not the pain of freaking out, but the loss of your IQ. When you're freaking out, you don't think straight. You do the stupidest things like sell the absolute bottom, because now you've got to cover the pain you're under and the sleepless nights because you were overexposed. So really, it's always like I've always got a chunk in cash, even though maxis, like us, I'm also could consider myself a maxi when I talk about Bitcoin as a monetary standard, but us maxis like to think all in and never hold that dirty sinking fiat. But I'm just practical. It's like I'm gonna have this percent. I think it's like, well, my minimum is always have 10% in cash, and that 10% in cash, I know that that's self-preservation of my ability to think, right? So that's my strategy is to have between 10 to 20. I probably want to ramp it even 20 to 30%, maybe even 40% in cash as we go into this year. But I would say that it's because cash, we can currently yield on cash, and we can beat the monetary dilution that the Fed's printing. I'm looking for high yield on USD, and honestly, that's better than real estate growth. So my thing is now to go 2 liquid buckets. One is crypto, Bitcoin, predominantly. Actually, the only thing I hodl is Bitcoin, and then I have stable coins that are yielding, and then I have this speculative thing called a exchange account.